Alright, welcome back to another market recap. Today we have a lot to cover. Today was an exciting day. I caught a 3-to-1 risk reward trade live on my live stream, so if you haven't checked that out yet, definitely go check that out. And to all the new people who have recently subscribed, thank you so much for subscribing. And if you're new to my channel, my name's Jake. I make daily market recaps and videos about ICT concepts, so if you like that type of content, definitely consider leaving a like, subscribing, and joining my Discord, which is completely free, where I help you guys learn how to trade, as well as my own journey in trading, while I'm on my own journey in trading. So, let's get right into it. So, today was, from the beginning of the day, I said in my live stream that it was a bearish New York manipulation. That's what it seemed like it was. And the reason I said this was because we had Asia and London where we just kept going up and then we were manipulating up. This was a Judas swing to the upside, and the reason it seemed like that was because on the high time frame, this is a weekly breaker block, a high, low, higher high, lower low. There's a weekly fair value gap. So here's the weekly breaker block. Here's the weekly fair value gap. And here's the weekly order block mean threshold. And so you can see this mean threshold. I said this in my weekly outlook a long time ago. I said this in my weekly outlook 2 weeks ago. I said this mean threshold, I could see us getting a reaction off of this. And essentially this was the higher time frame key level that got the reaction, right? Maybe I drew it a little bit off, but the mean threshold was the key level that we got the reaction off of. So anyway, Asia goes this way, London goes sideways, and then London kind of forms a range. And when London forms a range like this, it tends to create situations where you can get this bearish New York manipulation, and then New York distributes in the opposite direction. And then what really convinced me that we were going to have this bearish New York manipulation type day was there were equal lows at 20,232. So there were these equal lows that were clear as day. You cannot miss these equal lows. These two equal lows on the 5-minute time frame, and these also happened to be essentially the same as the low of the day for the current low of the day on the daily candle. So these relatively equal lows were the low of the day, also the low of the day on the daily candle. And I marked this out in my live stream, and I said, like, what are the odds that the previous day's low is the same as these equal lows? So I said previous day's low and equal lows. Now I was like, what are the odds that would be the exact same, right? Like, that is crazy. And so, like, this is the draw on liquidity. I said this in my live stream, and I was like almost like screaming it. I was so excited. I was like, this is the draw on liquidity. This is the draw on liquidity. It's a previous day's low, and it was equal lows. It was both. So anyway, I said that when price was all the way up here. Then I'll show you, before I get to my trade, I'll show you entries that you could have taken before you got to my trade that I did not see in live time, but they're not my model, so I probably would not have traded them. But in the future, I'm actually going to start working towards being able to take these other kinds of trades, because I am really building my confidence in them, and I'm starting to really understand these other models at a deeper level. So this was essentially like almost like a silver bullet, but this fair value gap did not form between 10 and 11. But anyway, we swept London's highs. Went into this order block's mean threshold on the higher time frame. Then we got a 1-minute market structure right here, at which point this 1-minute fair value gap formed, right? And I would consider this like the 1-minute breaker structure, right? And the 1-minute fair value gap formed. This, you would have had your stop loss at the high if you're doing a simple sweep market structure shift, fair value gap entry. This would be your entry at this fair value gap, and then I would just target London's lows, and you can see that I marked this out on stream after it happened. I missed it in live time, but this would have been a 4-to-1 risk reward trade if you had targeted London lows, which is crazy. And then also, if you measure out this Judah swing, because this is the clear Judah swing, right? Because market opened at 8:30. This was the final move up, the final manipulation move before the distribution. And so if I measure that out, you can see that the -4 to 4.5 area is right around at London's lows. So this was the clear target, and also the -2 to 2.5 was right at this low. So these were the clear targets. And so very clear targets for this possible trade. As well, you had a manipulation move here, and you could have measured it like this. And yeah, if you measured it like this, you can see that the -4 to 4.5 range also happens to align with our draw and liquidity target. So it lines up perfectly, this -4 to 4.5 range. And I said that as well on my live stream. So it's pretty cool that that lines up like that. And then you had this 1 minute fair value gap that price responded to. I don't really know if that's like any kind of entry or what. Like I wouldn't consider that an entry or anything, but like maybe someone could enter off of that. I don't know. Not really my entry model, but like in general, price reacts off this fair value gap, and then here we get what here we get my 3-to-1 risk reward trade. And I just had a ton of conviction in this being the draw and liquidity, like a ton of conviction. So this was essentially where I want to take all off. And I got kind of confused here. I accidentally left one runner, and I accidentally took my runner off perfectly at the low. But I got confused because I couldn't figure out what happened to the previous day's low, and then I realized it was today's low. So it already got taken out. So I was confused. I was leaving a runner, and I didn't know where I was leaving a runner towards. And I was like, oh, the equal lows already got taken out. So then I took my runner off, and essentially got like this 3-to-1 or 4-to-1 risk reward trade, depending on what you mark as the low. Here I'd mark this. This was my target essentially, but this is the trade I ended up taking. So anyway, let's talk about it. So we had this 1 minute fair value gap. Price comes up. The wicks do the damage. The bodies tell the story. So the wicks push above the gap, but the bodies respected it. At which point we had a 2 minute inverse fair value gap. This candle body closed below. So my entry was actually right here. And that is how this became a 3-to-1 risk reward trade and not a 4-to-1 risk reward trade. Was my entry was right here. Then this was kind of scary, but I was saying in the live stream like, hey, I'm following all my rules. This is a good trade. And I'm targeting the clear draw and liquidity. There are clear equal lows down there. This is previous day's low. This is clearly where the market's drawing to. If this is a loss, that's fine. I think this was a good trade. And then from there on, we went straight down to previous day's lows and equal lows. And I was super happy about that. As well, it's important to note that we did, of this high time frame range, you can see that we did actually, we did actually come back up into premium for this trade, which increased my conviction as well, because we pushed back up into premium, held this 1 minute gap, got the 2 minute inversion, and that's what gave me even more conviction that this was going to be hopefully a good trade. Now, we were pretty far in discount, so that was the one thing that I like of this range, right? Like of a lower time frame range, like something like this. Like we were already pretty far in discount, which was concerning a little bit, and that's my one drawback of this trade. But in general, other than that, I think this was an excellent trade. And I was super confident in this draw and liquidity getting hit because it was equal lows and it was the previous day's low, and it did end up getting hit. So these are the two trades I saw today. I tried checking Twitter to see if anyone else posted anything, but it looks like Hydra didn't take anything, and Dodgy was trading on oil for some reason. So I didn't see anyone else say anything about any trades they took. So hopefully you enjoyed this video, and this helped out your trading a little bit. I'm getting better along with you guys, so everything I say might not be perfect, but I'm on my journey to getting better and becoming a better trader. So hopefully you enjoyed this video, and I will see you guys in the next one. Bye.